Alright guys, welcome back to another episode with NJZP. So today we're going to be going over how much you get paid and after taxes, how much you actually get. So when you do start working for an employer, you get a per hour rate or a salary. So this person gets paid weekly. If you do the math, it comes down to about $1,115. Okay, so we're going to start with withholding taxes, and that includes Social Security, Medicare, federal and state taxes. And the state we're going to be using is Minnesota. This person paid $63 for SS, Medicare $14, $77 federal, and state $51. We keep going down. We have deductions. This person is contributing to their HSA pre-tax, and also contributing to their investments, 401, Roth, whatever it may be. Healthcare, they're also paying into healthcare, about $42 a week. We're just accustomed to seeing all this, but we're going to look a little bit deeper into the numbers. And basically, 6% of your wages to Social Security, Medicare about 1.5, federal 8, state 5, and your investments about 5, and so on. So that's a little bit behind the numbers of what you're paying. Like I said, this all depends on what you fill out on your W-4 when you first start employment and how much they take out. So at the end, after all the taxes and the deductions are taken away from your paycheck, you're down to about $760. There's a lot more I can go into with your retirement plan, with HSA and how that's good and all this, but just for the sake of the video, we're gonna run through this. From your weekly paycheck of 1.5K, after everything's done, you're only actually getting 68% of your paycheck, but it's not all gone because this part is good. These benefits are good depending on how you use them. All in all, just the withholdings, you're paying about $207. Since this person's getting paid weekly and there's 52 weeks in a year, their grand total that they're paying roughly is about 10K or almost 11K in taxes. This is how you can get your breakdown on how much is actually being taken out of your paycheck by percentage. And this is what your employer withholds. And then when it's time to do taxes and you go with your tax preparer, they submit it and then they tell you whether you owe taxes or you get a refund. When you get a refund, that means that throughout the year you've been paying more than you should have, so you're getting a refund. And if you have to pay taxes, that means that throughout the year you haven't been paying enough. Either or, they both have their pros or cons, whether you get your money before or after. That's all depending on the person. And then on the other side, the federal and state taxes, this is how it works out. First, for this person making 58K salary, the standard deduction, there's a standard deduction and itemized. Most people go with standard deduction, so we're gonna go with that. For 2024, it was about $14,575. And you apply your standard deduction to your salary, which you get about 43K. This is the amount that's going to be taxed for both federal and state. All right, so we go down to federal, and basically the chart that they use is going to be this one right here. And what a lot of people think is basically that if you're making 58K, your whole paycheck is going to be deducted at this rate, 22% across the board, which this is a misconception. In reality, what happens is that your first $0 to about 11.5 gets taxed at a 10%, and then so on and so forth. So as soon as you hit this number, the rest from 11 to 47 gets taxed at about 12%. So for this person, his tax bracket is at 43, and using the same 2024 tax rates, we're gonna apply it on our table. And basically 10% of the first 11,600, that comes down to about 1.1K. And then the next one is going to be this 43 subtracted by this 11, and that's going to get you to 31K. So 12% times 21 is going to be this amount. Remember to deduct your salary by the standard deduction before you start implementing the taxes. Okay, so that's for federal. You're paying about almost 5K basically. Then this is like for the year. And then if we look at state taxes, same thing, same application. Your first 0 to 31K is taxed about 5.35, and after you reach that 31K, it's gonna be about 6.8. So remember, it's not where you land here. It's basically breaking it down from 0 to 31 at 5, and then from 31 to 04 at 6. And I'm gonna use that formula into this sheets. And basically, like I said, it's your first 33K that gets taxed at this rate, and that comes down to about 1.7K. And the next tax rate is 6.85. And like I said before, I got this number from subtracting 43 by 33, and basically that gives me about 10. You add these two up, they should equal this amount, and it does, so we know we're in the right track. Now we multiply the rates to the amounts, and we get about almost 2.5 in state taxes. All right, so we're doing good. And same thing, we're gonna continue with Social Security tax. This is basically 6.2, take my word for it, and Medicare tax is 1.5. So we have this in this table, and we're gonna multiply this, like I said, by this amount. And that's basically the behind the scenes for their side and how they estimate how much they're gonna tax you. So this is for the entire year. So once you have all of this, just add them all up. So you're basically supposed to pay about 10.7K. And this is what you're currently paying. And when you do your taxes, basically the two get compared and what you should have paid and what you are paying. If you compare the two, you've overpaid $2.58. So when you do your taxes, you should get back about $2.58, which is good. So this is an ideal situation because you didn't overpay or underpay. Everything on this side is basically constant. I just use this figures for 52 weeks exactly. And things don't always work out that way. Sometimes you lose your job or you get promoted, so you get more income or less income, and that affects how much taxes you're paying throughout the year. But this is just a rough idea of how things work behind the scenes on the employer side and the actual government and what they expect to collect if you do work the entire year. So yep, that's the behind the scenes. Hopefully we learned something. And when you do your taxes, they will be matching with what you've paid so far for the year and what you should have paid. Depending on that, they'll either give you a tax refund or you would have to pay tax to match up to what they have. So hopefully that made sense and you're able to understand a little bit more on what happens with your money. And this is just a good depiction of how things work behind the scenes of the actual net amount that you get paid every week. If this all doesn't make sense to you, you can just go into, I think there's an ADP free website where you just plug in your situation. Actually, I'll show you right now. So yeah, this ADP salary calculator basically is a big help. If you don't want to see all the behind the scenes number and just want to know if you're actually getting paid where you're supposed to, this has a lot of features. This takes everything into account, overtimers and which paycheck you're trying to figure out if you got paid exact amount or not. It gets really into detail with federal taxes. They ask you all these questions. And yes, like I said, hopefully you learned a thing or two. If you didn't, let me know. If I made a mistake somewhere or my numbers don't look right, just let me know. I'm always looking to improve. So hopefully you can use this information to get a better picture or idea of how all this stuff works. If you do end up having to pay taxes, you would just have to talk to your employer and update your forms so you can get your taxes deducted throughout the year versus having to pay that maybe big amount. That wraps up the video. Hopefully you enjoyed it. And this is Dude with the Dream checking out. Peace.